Welcome back, people, to another trade recap, and in today's video I'm going to be going over how I am down a total of $1,160, which occurred from taking two back-to-back losses. These trades were not emotional in the slightest. I follow my risk plan getting into them. I follow my risk management plan getting out of them. So let's just get straight into the breakdown of how I took losses, because if anything, losses are what teach you more than wins. You can change your system due to a certain amount of losses. But anyway, as you can see on my chart right here, let me just turn the executions on. Today, I passed two evaluations off of market open, which granted me two fresh 50k express accounts. Naturally, I risk $250 per trade, i.e., I think that's 0.5% of the account. And here are the executions. So I took one loss up here. I then waited for a retracement. I entered in with 7 contracts there. Price retraced, rejected up. I added in contracts here, and then I got stopped out for a total loss of a bit more than 0.25%, but it's probably 0.5%, but welcome back, people, to another trade recap. And in today's video, I'm going to be going over how I am down a total of $1,160 on the day. First of all, jumping into market open this morning, I passed two evaluations, giving me access to two fresh 50k express accounts, and these are what I took my losses on. Back-to-back L's, followed my risk plan, great draws on liquidity, waited for conviction. So let's just get straight into this breakdown and how you could have read the charts today and found out the direction. So as you can see, 9:30 opened right here. It's been 3.5 hours since market open. Do I trade New York lunch or the start of New York PM ever? Not really, but today it just looked fantastic. If we get rid of these chart executions, you will see just the most crazy liquidity pool being equal highs with January's high. 4-hour chart, what are we seeing? We are seeing January's high is resting above. Look at that, man. Equal highs, bro. That is stupid. If we head over to the daily chart, we can see that for the past 4 days, well, tomorrow's Friday, so it's the 5th day of the week, we've been sprinting to the upside. Unfortunately, I've been on evaluations the whole week, meaning that I couldn't make the most of these bull runs. But today just looked great. If you see a setup outside of your normal trading hours being equal highs with a previous month high, like if that doesn't tell you to enter in longs, then I don't know what does. But looking at the 4-hour chart today, how I went about finding a bias for the morning, and I'm going to repeat it again. I never trade really after 11 a.m. New York time. Today was just a one-off because of the equal highs. So getting into it, obviously daily charts, we're bullish. We're bullish, looking for all-time highs being the most pinnacle point of buy-side liquidity, and we've got January high here. Why am I still bullish opening up the charts today, even though we've been bullish for the past 3 days, and you might think we need to have a retracement? I'm still bullish because, as you can see here, we sweep 1 million buy-side liquidity points. And what do? We just carry on running. We close above daily chain of state delivery. We run higher. We tap into daily chain of state delivery. We run higher. Why would you not expect us to run to even more buy-side liquidity today? Like, we're in a bull run. We're not going to be looking for short. So heading over to the 4-hour time frame, you could see today that upon market open, price was respecting this 4-hour for value gap. Now, as you can see, price manipulated lower, baiting people into shorts or cancelling out people's longs. which is good for the markets at the end of the day. I mean, it rebalances price slightly. It builds up and generates more liquidity to be taken. But if we head over to the 30-minute time frame, we can see that there is a fair value gap down here, fair value gap up here. Now, first trade of the day was not good. It had conviction behind it. Yes, I'm not going to enter a trade without conviction. We're obviously targeting this mad liquidity pool being equal highs, but I did not recognize that there was a 30-minute fair value gap that was about to be opened up below. I easily could have avoided this loss, but I'm not going to beat myself up about it because 95% of this trade was following my rules. Price, retrace lower. Now, I just want to hit it off with, I was looking at price all the way from this point. I was like, cool. Price is probably going to follow the same exact moves it's been following recently. It has not been retracing lower. It has spiked sell side at some points and rejected higher, but for the most part, it has not been sweeping out sell side lows. So I was just going to accept the fact that price was going to run all the way to January high and I wasn't going to get in with it. That is okay. I was completely fine with just hopping off the charts as soon as January's high got taken. But what really sparked this idea to trade today was just, bro, we left equal highs. Even NQ didn't take it. ES obviously hasn't taken it. And both indices have been flying to the sky. So anyway, trade number one was easy. I was looking to get into the markets at some point during this range. Obviously, I ended up not doing that. But to go up, we need to go down. To take out January's high, we need to manipulate lower. So thinking about everyone who's entered the trades in this period, they've all either got their stop losses in this low for the maximum and break even for the minimum. So us having a rebalance to the downside sweeps out all of these people's liquidity, takes their money, and presents opportunity for price to buy to the upside. I could have waited for this 1 minute fair value gap to get inversed. As you can see, it didn't. But at the end of the day, I was confident with what price was going to do. I just got caught on the backside of it. I'm okay with that. I'm not going to bug out. It's all right. Trade number two. Hopefully this is somewhat like not interesting, not enjoyable, just like purely helpful for the viewer. Trade number two. Price comes all the way to the downside. What does it do? It rebalances into this 30-minute fair value gap. Now, one thing that I was very skeptical about and how you guys can perceive the markets in the future is when you see a high like this get taken and price, even whether it produces an equal high, whether it just dabbles above the liquidity and sweeps it, or just leaves it as a whole, just resting there, you have to be wary about the high time frames. As we can see, this represents London high. On the 4-hour time frame, you can see if we're having a rejection all the way down from producing equal highs to London high and not even rejecting to the upside, you can see that something's wrong. You can smell something fishy. And that is exactly what it looked like today. I mean, I didn't do a bad trade for the second one. I waited for this 1 minute fair value gap to get inversed. I entered in like here, I think. Take profit obviously being January's high and stop loss being the last low on the 30-second time frame, which was here. I actually entered about here, I think. But yeah, targeting a nice little 1 to 4R. Price came to the upside, came to the downside, almost stopped me out, went to the upside, broke structure internally again. I ended up layering in. I didn't move my stop loss to this low because it would have just been worth too much risk. I moved it to this low and unfortunately we got absolutely spat on. Price put in an SMT, NQ held this rejection block, and it is what it is what happened. I'm down $580 on the day. Am I going to bug out about it tomorrow? Am I going to over risk about it tomorrow? Am I going to revenge trade tomorrow? No, I'm not. I've been in those shoes before. I'm not manifesting my worst outcome to come to me. I'm just saying, like, I've made that mistake before. I don't have any reason to make it again. I'm down on my accounts today. I'm still going to follow my rules tomorrow. So that was a bit unneeded, the end. But hey, man, I mean, you're not going to win every day. As long as you just stick to the strategy, stick to what you understand works, then eventually you'll get what you want. So thank you for watching this video. If you learned something from it, if you want to see more in-depth videos, head over to my Discord because I do daily analysis every single day. You can see how I scouted out this whole week being bullish, how I said Monday was going to be bullish, how I said Tuesday was going to be bullish, how I said Wednesday's going to be bullish, and how I said Thursday's going to be bullish. Like, if you find that somewhat helpful, head to the link in the video below. 100% you can take something away from it if you need that help. So thank you for watching this video, and I will see you tomorrow.